Yo, what's good, guys? What's going on? What's going on? What's going on? Or for the people joining, at least, what's goody, guys? What is going on? All right, so, let's go ahead. Let me go ahead and get the live going. Just so I can put it out. Obviously, that I'm live and everything. And we go from there, guys. Okay, so just give me 1 second. Let me just prepare the stream real quick for you guys. So obviously you guys can see the notification that we're live. Let me make sure breaking down my full trading strategy. Perfect. Okay, let me go ahead and put out. Let me go ahead and put it out over here. Give me 1 second. All right, sweet. I'm gonna put it out in this server real quick. What's good? What's good, Javier? What's going on, my man? What's up? What's up? What's up? All right, but guys, welcome to the stream. Well, welcome to the second stream of for this week in terms of classes. But yeah, guys. So today, honestly, I really okay. Although I did say on yesterday's stream that I wasn't really gonna trade today, which I didn't. Don't think I traded today. Typically for when we have F1, any type of FOMC news, when it's a red folder, I never trade it. All right. So today I pretty much just stayed cash. I got some stuff done around in real life off the setups. So I just took today off just to whatever. But before I go ahead and start the stream, let me put it out here on Instagram that I'm live. So give me 1 second over here. Let me see, link, YouTube, watch it here. 1 second, guys. I'm gonna put it out right there. All right, add to story. Oh shit, my fault. But what's good, guys? What's going on? What's going on? Blasty Poop Peep Nvidia. I saw, bro. Today we did have Nvidia news. All right. But all right. Anyways, am I live on Discord? No. I mean, you're watching the stream over here on YouTube. All right, my man. But 1 second. Let me go ahead and open up my YouTube studio. Just so I can have the stream going. Really clean over here. There we go. Okay. So guys, so pretty much what I want to do today is obviously okay, so in the last class, what I was going to say was, okay, in the last class we ended up reviewing the continuation model. All right? In today's class, I kind of want to focus more in terms of the reversal model. As that's the model that we tend to trade a lot more often rather than the continuation model, and today it actually ended up playing out really nice. All right? So, let's go. Okay, there we go. There we go. It's because I'm just setting up a million things here on my computer as I talk. But yeah, guys, pretty much today we had a perfect reversal model that I really want to teach you guys. All right. So before I go ahead and show you guys the trade that you guys could have caught today and how you could have traded it and made money from it, I'm gonna go ahead and give you guys some examples in terms of how the setup should be looking like, what you should be looking out for in terms of confirmations, how the market should be looking like. You guys get the point. All right. And by the way, welcome everyone tuning in. Welcome. All right. Now, someone here said, David, please explain the Apex of please explain Apex Trader funding. I'm so confused on what happens when you pass and how you get your first payout and how much risk you should be taking on a 50K account. I got you. Now, before I do that, I'm gonna go ahead and turn on the fan really quick because it is pretty hot over here in Miami. So my house is a little bit hot. Give me 1 second. All right, I'm back. Okay, so I'm gonna go ahead and answer your question real quick before as we get into the chart real quick. All right. So for the people confused in terms of Apex Trader funding, how it works and everything is quite simple. All right. So E110 said, I'm confused on what happens when you first pass. All right. So I'm assuming you passed your funded account today, which if you did, congratulations, and that goes for anyone else that might have passed it today. All right. Now, the way it works is at 6 p.m. EST sharp, right? That's when the Asia session opens. That's when the new trading day counts. All right. So anytime you pass a funded account on Apex or on TopStep or any other firm at 6 p.m. EST, they're gonna go ahead and send you an email on the instructions saying here's how you activate your PA account. All right. You pay the fee. And that's it. You know what I mean? Going to tomorrow, you should have your PA account pretty much all done and ready. And then you're free to trade. All right. Now, how do you get your first payout? Pretty simple. All you have to do is hit the profit goal in a total of 8 or more days, and then that's it. You know what I mean? You pretty much just secure the payout just like that. All right. It's quite simple. You just once again hit the profit goal in 8 or more days. That's it. All right. And how much risk should I be taking on a 50K account? Me personally, I like to risk about 7 contracts. with about a 30-point stop loss, meaning that you're gonna have about a 350 to $400 loss per trade. And if you're averaging a 1 to 2 minimum risk reward ratio trade, you should be making anywhere from $600 or $800 or more per trade, while risking $350 to $400 per trade. So that's the risk that I take. So about 7 contracts with 30 points. All right. What do you mean by 8? Well, yeah. So the way Apex does it is they count the trading days. If you make $50 or more, that will count as 1 day. All right. So as you're getting closer to that profit target, you need to have a total of 8 winning days with $50 or more to actually secure a payout. All right. Let me see. Hey David, how long until I get my eval to activate my PA? At 6 p.m. EST, you should get it. So by the way, congrats on passing your account. But yeah, at 6 p.m. EST, you should get it today. All right. And by the way, for everyone, now that we're talking about Apex, guys, tonight I think tonight the Apex 90% off sale is ending. So make sure you guys use code Blastoise. It is at the top of the screen when you guys are buying your funded accounts. All right. It will be 90% off. All right, let me see here. Yo, David, I'm trying to get my friend introduced to futures. How do I go about introducing him without getting too much into strategies? Okay, well, is he completely new to trading, or does he have experience with options or the stock market? Because the thing is, I don't know. Good question. I don't really know how to get someone hooked into trading futures. You know what I mean? Like I'm a mentor and everything. Like I teach all of you guys how to get started in trading, but I don't really hook you guys on. You guys are already kind of hooked into trading, and I just kind of guide you guys through it. So honestly, I don't know. I don't know. I mean, there's a million ways. I mean, you could show him some profit days. I guess the money will get him hooked or something. I'm not sure. I'm not too sure to go about it, but I'm sure there's like a million and one ways to go about it. Consecutive days. Yeah, it doesn't have to be 8 days in a row. It could just be just total. You know what I mean? 8 days traded total. All right. Okay. So the payout depends on how much you make in the 8 days. Exactly. All right. And how does the Apex split work? Apex is not split. You keep 100% of your profits. So if you request $2,000, you request $2,000. All right. What's the max payout for a 1K a static account? For a static account, good question. Let me go ahead and check for you real quick. Before we get into the trading strategy, guys, give me 1 second. I'm just catching up with some questions because obviously some of you guys might be a little bit new to all of this. So when it comes to Apex or the static account, the most you can request is $1,000. Correct. Yeah, $1,000. So yeah. But anyways, okay. So I'm pretty sure we are pretty much caught up on the questions for funded accounts. If anything, you guys obviously can always let me know. But I want to get more into the trading strategy. All right, guys. So let's go ahead and get started with that. All right. Okay. So the strategy that I want to go ahead and teach today, guys, is the reversal model. All right. Now this model is pretty simple, but obviously there are a few stuff that you guys need to that you guys need to pretty much know before you obviously get into it, and those things are what you have to look out for in order for the reversal model to be confirmed. All right, now when it comes to the reversal model strategy, it comes into 4 steps. All right, step number 1 being the trend. All right, the trend is obviously your friend, right? It's the most important thing. If the market does not have a trend, then you won't know what the market is doing, where the market is going to be going to, and pretty much the whole story as to what the market wants to do. All right, so you need to make sure you guys know what the trend is in the market. All right, number 2 is your DOL, drawn liquidity. This is pretty much like, okay, let's say for example, the market trend is bullish, right? Why exactly is the market trend bullish? Well, the whole reason the market trend is bullish is because buyers are interested. Why are buyers interested? Well, mainly because they might want to push price into that level of liquidity wherever it might be sitting at, whether it's higher or lower, whether the trend is bullish or bearish. All right, so the trend is the market telling you what it's doing. The drawn liquidity is the market telling you exactly where it wants to go to. All right, now for the reversal strategy, as we are trading reversals, right, we're not trading with the trend, we're playing kind of as the trend is flipping. Step 3 behind this reversal strategy is the MSS model, right? This is pretty much when the trend in the market goes from being bullish to bearish or from bearish to bullish. All right, it's just a shift in the structure of the market, right? So that is the MSS model, right? Now for the final step, which is going to be the cherry on top, is going to be the IFEG model, right? This is our reversal strategy entry model that we use on a day-to-day basis in terms of when the market is reversing. All right, now you could use a regular fair value gap, but it's not very unlikely, but it's more likely for an IFEG to play out in terms of an entry model rather than a regular fair value gap continuation model as the market trend is reversing. All right. So yeah, when it comes to the strategy that I use pretty much not every single day, but most days, I'm gonna say like 95% of the days, I'm always trading IFEGs. And obviously, if you guys do know, if you guys follow my trades, or if you guys watch me on stream and everything, you guys will know that most of my alerts are based off IFEGs, right? So let's say, for example, I'm gonna randomly scroll up, down, up, down, up, down, and I'm gonna click, and the trade is probably gonna be in IFEG, right? Check this out. Look at this. You see what I mean? So this is pretty much what I mean by most of my trades being inverse rally gaps. They're just more likely to happen. All right, so yeah, this trade ended up playing out for 60 points off an IFEG. All right, so I'm gonna show you guys exactly how to find these models and how to use them to your advantage. All right, so I'm gonna go ahead and keep this over here on the side. All right, now we're gonna be starting with step number 1, which is gonna be the trend in the market. All right, once again, guys, you always need to make sure that you know what the current trend in the market is, because if you don't, then you're going to get lost. All right. Obviously, if the market is going up, you don't want to be trading shorts or puts if you're trading off options. All right. You obviously want to be playing with the trend. Now, you might be wondering, if the trend is bullish, why do you enter shorts? Well, once again, guys, I don't just enter because I'm feeling like the market is going to go down. I'm entering because of what the market is telling me. So on the higher time frame, it could be bullish, but on the lower time frame, the market structure might be shifting as we go into shorts. All right. So to the new trader, you guys might be like, hey, the trend is bullish. Why are you entering shorts? But we have the whole reason as to why. And I'm going to explain to you guys with this 4-step model right here. All right. Now, why is it called liquidity and not just highs and lows? Good question. Actually, I'm going to review that as we go into step number 2. But let's go ahead and stay organized and focus on step number 1 for now, just so you guys obviously know what's going on. All right. So right now with the trend, obviously, I'm gonna say to the naked eye, it's really easy to find the trend. I mean, if the market is going up, then the trend is bullish, and if the market is going down, then the trend is bearish, right? It's pretty simple. And I'm not gonna lie to you guys, yeah, it is supposed to be this simple. But there is a little bit more that happens behind the scenes in terms of looking for an actual confirmed trend. All right, now let's say, for example, the market trend is bullish. Does that mean that the market is only going to be going up? No, right? This just means that the market overall, yes, it is going up, but it is going to have these little pullbacks here and there. All right, and same thing goes with the bearish trend. As the market is going down, it might have these little buying push-ups, but it's going to go even lower right after. All right. Now, this is exactly what I mean by going more into detail behind these trends, right? So once again, guys, in a bullish trend, you're gonna have these little sell-offs, right? These little things called pullbacks, which will look exactly like this. So we push up, we pull back just a tiny bit, we push up even higher, we push back down a tiny bit, we push up even higher, and you guys get the point. All right, this is known as a higher high and a higher low pattern. All right, so for now, what we're gonna be doing here is we're gonna be marking out the main low, which will be down here, and the main high, which will be up here. All right. As we were creating this main high up here, the market ended up pulling back just a tiny bit and created a new low. Right now, what is the pattern here? Well, this low that was created right here, it is a higher low from the previous low, right? And that's where it gets named a higher low. All right, let's go to the next low, right? So we have the new low right here. We created another one right up here. All right, this low is once again higher than the previous low, right? And as this pattern goes on with these lows, right, that would just kind of confirm to you that the trend is bullish. All right, same thing goes with a bearish trend. All right, let me go ahead and fix this up real quick. All right, yeah, same thing goes with a bearish trend, right? We have the main high up here. All right, since we're in a bearish trend, obviously sellers are going to have a lot more control and making the market go a lot lower. All right, but how exactly do you know that this is confirmed? Well, when buyers try stepping in and pulling the market back, and sellers quickly reject it once again, going even lower, is going to be creating these lower highs constantly. All right, so this is the pattern that you guys want to be constantly looking out for when you're finding your trend, right? Because yeah, it might be as simple as looking at the market, and if the market is going up, then sure, the trend might be bullish, but there might be a little bit of, something going on behind the scenes. So the way you can confirm that is by obviously looking for the patterns in terms of higher highs, higher lows, or lower highs and lower lows. All right, so that's pretty much step 1 done, right? That is going to be the trend completed. All right, so I'm going to go ahead and put an emoji here just so we know that the trend is done. All right, now someone here asked, his name is Alo Trades. He said, why exactly is it called liquidity and not just highs and lows? Well, you could call it highs and lows. It's kind of the same thing, but let me explain to you guys, and I need you guys to really pay attention here, all right? Because this is exactly how the drawn liquidity works in the market, all right? Because yeah, technically, to the we're all retail traders, but to just let's just say a trader that's not trading ICT concept, it might just look like the market just had like a nice bouncing point or a nice rejection point, and we just go back down, right? That will be known as a high or a low. All right, but if you guys trade ICT concepts, which is something that I do, right, we look deeper into these highs and lows. All right, now what tends to happen inside of these highs and lows? Well, let me go ahead and explain it to you guys. All right, so let's go ahead and say that the trend is bullish. All right, I'm gonna go ahead and delete this bearish example, just because we're not gonna use it for now. Right, let's go ahead and just pay attention to this bullish trend. All right, now as the trend is bullish, right, we're gonna be marking out these lows right down here. Right, as the trend is bullish, us retail traders, we are trying to get filled. Obviously, now that we know that the market is going up and probably wants to go higher, to the retail trader, which is all of us, obviously we want to be getting filled at the absolute low of the market. All right, so instead of entering longs or entering calls or whatever, you know what I mean, and just entering the upside, instead of us entering as we go up, we want to be entering based off of these pullbacks. All right, it just gives us a discounted price in order to get filled at the absolute low and just make the most money possible as the market goes up. All right, so to the retail trader, what tends to happen is instead of us buying it as the market is going up, we're going to wait for this pullback. We're going to wait for more of a mini bounce, and then we're going to enter our long position and place our stop loss at exactly where the market bounced from. This just shows that, it's protected by buyers. It's where we stepped in, and, sellers just couldn't take control to make the price go any lower, right? So think of this to the retail trader as kind of like a supporting level, right? Buyers stepped in, sellers can't step in. We just can't break below this level. So a lot of retail traders like us, we're gonna go ahead and place our stop loss at this low. All right, and I'm sure you guys might be agreeing with me because that's just pretty much how we trade, right? We want to be getting filled at the absolute bottom with it just a tad bit more confirmation that we're gonna go higher. All right, then we just place our stop loss at the complete low where we bounce from, and we just go on about our trade. All right, now you guys got to look at it at a deeper level. All right, here's exactly what happens. Now, I'm going to ask you guys in the chat. All right, how many of you guys in the chat know exactly what level 2 trading is? You guys can just say yes or no, just a simple yes or no. All right, just let me know. I'm going to give you guys, a few seconds. I'm going to drink some water in the meantime. But just let me know if you guys know exactly what level 2 trading is in the market. All right, just let me know. All right, so I'm seeing a no in the chat here. All right, so for the people that don't know exactly what level 2 trading is, okay, so to a regular trader, let's say for example you're trading on Robinhood, you're trading on Webull, or you might be even trading on Tradeovate. All right, so to us, what we're seeing, guys, is just regular candles. All right, it's just like a green box, a red box, a few red lines, a few green lines. We're not thinking much of it, right? We're just looking at boxes, right? Little candlesticks. But guys, what level 2 trading is it gives you a deeper look into as to what's happening inside of that candle. So I'm talking how much money is going per candle, how many orders are existing per candle, how many orders got filled, how many orders didn't get filled. All right, so what level 2 trading is just you getting an actual look as to what's happening inside of these candles that the regular regular trader is looking at. All right, now this is where hedge funds, institutions, and banks take advantage of. All right, now to us, right, let's just say for example, right here, it seems like the market found an absolute low right here and it bounced up. So to the retail trader, it might just seem like, we just had a nice bounce here and we just went up, right? But what's going on here, guys, is as we're going up, a lot of us are placing, the people that are entering longs as it's going up, they're placing their stop loss at exactly where the market might have bounced from, which in this case is going to be at 407, 21,407 right here. All right. So what tends to happen, guys, is anytime you guys place a stop loss in the market, pretty much what a stop loss is an open order. So you're pretty much just telling your broker to tell the market like, hey, if price ever goes below this level, I want you to sell this guy's contract over to someone else. All right, guys. So the way the market works is there has to be a buyer and there has to be a seller, right? If one of those two things are missing, how is the market going to move? All right. So when people are entering their long position around here, they're pretty much telling everyone like, hey, if price goes back down here, I'm willing to sell it to anyone else for a loss. All right. And that's where banks, institutions, and hedge funds take advantage of it. All right. So pretty much when a very, very strong level of liquidity is formed, or when a very, very strong bounce or rejection in the market is made, all right, a lot of people are seeing this like, hey, like this is a really really nice bounce, or this is a really really nice rejection, I'm gonna go ahead and place a long position or a short position, and place my stop loss at the exact point where we rejected from. And now, guys, a lot of us think the same exact way. So a lot of us are probably placing our stop loss at the same exact level, right? And what happens when so many orders are placed at the same exact level? Well, that's where liquidity is formed. We are pretty much creating a pool of liquidity. So we're pretty much telling the market like, hey, if we ever go down into this level, I'm willing to sell my order over to someone else, and that someone else, guys, is going to be the banks, the institutions, the hedge funds, and just all of the big money in the market. I'm talking billions of dollars. All right. These are the people that control the orders. All right. So, guys, the way this works is they do level two tape reading, and they're able to see exactly where the orders are lying at. All right. So let's just say, for example, right, the market is going up like crazy, and the banks, everyone in the world knows that the market is probably going to continue going higher. All right. Obviously, the people with billions upon billions of dollars, they don't want to be entering with us up here. No, I mean, guys, where there's a winner, there's a loser, and where there's a loser, there's a winner. All right. So the way it works, guys, is the banks, they don't want to be buying up here with you guys. They want to be buying from you guys. All right. So what they're going to be doing is they're going to be pushing the market back down into everyone's stop loss, which is going to be where the liquidity is lying, the pool of liquidity, and they're going to stop everyone out. All right, guys. And once again, where there's a loser, there's a winner. So when we're willingly selling our orders over to someone else, which is going to be the banks, institutions, or hedge funds, they're getting filled at the absolute low, like at the easiest point possible, because we're the ones offering the sell order right down here with our stop loss. You know what I mean? So the banks, they just can't create like orders out of thin air all the way down here. They need to obviously make the market go back down, and then they need to fill our orders from the people selling it, and then they sell it over to the banks at the lowest price possible. And since banks, obviously, you guys know the market requires a lot of money to move up or down. Once the banks are able to get filled at the absolute low, they then use all of their money, which is billions upon billions or even trillions of dollars, into making the market go back up. All right, so this is known as a drawn liquidity sweep. Pretty much what's happening is the banks, they're sweeping all of the sell orders or all of the stop losses, which pretty much means that we're all selling our orders to the banks at the lowest or highest possible price before the continuation move tends to happen. All right, so this is known as a drawn liquidity sweep right here. That will be step number 2. All right, so how exactly can you find these levels of liquidity? Well, when the market is trending, guys, pretty much what you're doing is you're marking out every single low where you might think a lot of people or a lot of investors might have placed your stop losses. All right, so let's just say, for example, we're in a bullish trend, right? So any pullback that the market had, obviously, a lot of retail traders, they try getting filled at the absolute bottom. So what they're gonna do is they're gonna wait for a pullback to happen plus a little bounce. They're gonna enter their long position and place your stop loss over at these lows just like that, right? And this is where the DOL will be formed, right? So we have the main low right here, which will be known as the drawn liquidity, right? We're gonna have another drawn liquidity right here, another one right here, and another one right over here. All right, and that's exactly how these orders are placed. All right, guys, so let me know in the chat if I'm losing you guys. Maybe you guys might have some questions in terms of the trend, drawn liquidity, or whatever. All right, I will give you guys a few seconds to write up your questions. In the meantime, I'm going to drink some water because I am running out of breath. All right, so go ahead and type your questions if you guys have some. I'll give you like 30 seconds to like 40 seconds or so. And just let me know if you guys are feeling lost. If so, where exactly? Like what aren't you guys understanding? Let me know. Let me know. All right, let me drink some water over here. All right. So I'm seeing someone is saying that they're lost. All right. So is it Elijah? Elijah? I don't know. I'm just gonna say Elijah. Elijah Johnson. All right. Where exactly are you feeling lost in terms of the trend or the drawn liquidity or how the banks work, the stop orders? Let me know. Let me know. All right. So let me see. What if they push it slightly past the drawn liquidity, then go back up into the yeah? So that's actually exactly how the drawn liquidity works. It's not gonna be like a perfect read. All right. So it can't be like we go down, we tap the exact level of liquidity and we go back up. No, that's not how it works, because banks know exactly how retail traders work. Sometimes you're gonna see a little a nice support level just like this, right? And they're gonna be like, okay, if you go back down, we're probably gonna take out the stop order and go back up. So instead, I'm gonna place my stop loss a little bit lower past this drawn liquidity. So when a lot of retail traders they're placing their stop loss here, there might be that one retail trader that's like, oh, I'm gonna be a little bit smart here and put my stop loss just a few points below, just so I have like that safety net, just in case we just bottom ticket and go back up, right? Okay, right? Which will look somewhat like this, right? We place our stop loss just slightly over, right? Or slightly under, right? No, banks know about this, or the big money, they know about this. And before a deal will sweep tends to happen, the way price moves is, let me go ahead and delete this real quick. The way price moves is we take out the drawn liquidity, we might trade a little bit slightly under for a little bit, and then we go back up. And I'll show you guys a real-time example from today's trade. All right, guys. But yeah, that hopefully that answers your question. All right, so it won't always be on the dot. Sometimes it'll be a little bit under, a little bit over. It's just how it works. All right. But yeah, someone said here, not if it for sure makes sense. Perfect, perfect. All right. But yeah, someone here said, why don't you ever scale in? I don't know what you mean by that. Do you mean like when I enter a trade, like do I enter slowly? Me personally, I don't like doing that. I tend to find one entry and one entry only, and I just fully size there. That's just the way I trade. It's a preference in a way. I just feel the best finding one entry, the best possible entry, and I just enter from there. I'm having trouble identifying the trend, like which is the best time frame to use. Honestly, I feel like the higher the time frame, the better. But any time frame could work. You can find a trend off the 1 minute time frame, the 5 minute time frame, the 30 minute time frame, the 1 hour time frame. It doesn't matter. Either or, every time frame is probably going to be the same regardless. So if you have a bullish trend on the 50 minute, it's probably going to be bullish on the 1 hour. All right, but it's always safe to make sure that you look through every time frame and make sure that the time frame is aligned on the trend is aligned on every single time frame. Like the 5 minute, if the 5 minute is bullish, in order for the longs to work, I would say make sure that the 50 minute, the 30 minute, and even the 1 hour time frame is also bullish. All right, because if the 5 minute is bullish and the 1 hour is bearish, you know what I mean, you don't know what's going to be stronger. You know what I mean? So it's always good to have a multi time frame trend just confirmed. All right, that's just so you know that the market is really clean and moving in that one direction. All right, but yeah, can we put an order to buy or sell at the drawn liquidity? Yes, you can, but it won't always be a guaranteed bounce or reversal or rejection. All right, so that's exactly why we're using the 4-step reversal strategy. So yeah, technically, yes, you could use drawn liquidity to find your entry points, but it won't always work the same. All right, so would you rather just enter off, just blindly just because you think we're going to sweep the liquidity and go back up? Or would you rather have 2 more extra confirmations that are pretty much just going to confirm that your trade is actually sweeping and going back up? You know what I mean? Obviously, I'm sure, anyone with the brain here would obviously agree that you would want more confirmations. It just makes the trade just higher probability. You know what I mean? Because obviously nothing in the market is 100%, but it's always good to filter out those really bad trades and only trade the really, really good setups. All right? But I'll explain it now in a second as we go into step number 3. All right, but let me see. How far out can a drawn liquidity be before you disregard it? Well, actually, good question. There's no time frame, right? Let's just say, for example, NQ is pushing towards all-time highs, right? And we haven't seen all-time highs in the last 2 years. Is that all-time high level still valid? Yes. As long as the level of liquidity has never been taken out or tapped into, it is still a valid level of liquidity. Because as we're trading into it, a lot of retail traders might be like, oh, this is the highest point we went to. I'm going to go ahead and take shorts and place my stop loss at that highest point. You know what I mean? So, yeah, I would say any time frame works. If you find a level from 10 years ago or from, what's it called? Let me see. Oh, yeah. If you found a level from like 10 years ago, 20 years ago, is it still valid? Yeah, it could actually still be pretty valid. All right. As long as the level has never been tapped into or never swept, it is good to go. All right. The market is like a battle between buyers and sellers. Bank will move the price to stop everyone out. Exactly. At the end of the day, guys, banks are here to win because they have the most money. So it's either you feed into their orders or you trade with them. This strategy right here is mainly made to trade with the banks, right? And that's exactly why I'm explaining to you guys why you should be able to identify how a DOL sweep works, how to identify where it is, and how you could trade off of it. All right, that's pretty much what my strategy consists of. All right. But yeah, which TradingView subscription should I get for the best market data? I would suggest the CME market data. So it'll be CME. All right, pretty much what this market data does is it will give you data to the NASDAQ and the S&P 500. And that's mainly what I trade. So if you're following me, if you're following my trades, if you're following my teachings and everything, I would highly suggest you trade NQ, which is the NASDAQ, and you follow the CME data. All right. Once again, it is C like in cat, M like in market, and E like in execution. All right. Let me see here. How big is is usually your stop loss? I would say about 30 to 35 points on a on a typical, trade. So yeah, 30 to 35 points. Um, what's a good stock to day trade? Me personally, I don't do stocks. I do futures. But for me, my favorite is NQ. I always trade NQ on a day-to-day basis. So NQ is the Nasdaq. Once again, guys. All right. I know FOMC and Nvidia was out today. But I still took the MSS from this morning. Would you consider this a really good trade? Actually, yes. That's actually why I'm doing this class. I know I told you guys I didn't take a trade today, but I was active in the market and I loved what I saw. All right, so I'm gonna go ahead and review it in just a split second. I'm just kind of just summarizing what strategy I use for my reversals. All right, let me see. When do you move your stop loss to? Oh wait, no, wait, I skipped one. How often does a trend get reversed from the 30-point bounce and hit the stop loss? Um, I don't really know how you're asking that. How often does a trend get reversed? Well, it actually happens pretty frequently. Like I would say on a day-to-day basis. It's not, the markets are not always going to be going up forever. You know what I mean? It's going to have these pullbacks. It's going to have these bearish trends here and there and all that stuff. So hopefully that answers your question. But I didn't really understand it that much. Which is better, NQ or MNQ in your opinion? In my opinion, MNQ, best one out there. NQ is the same thing as MNQ, but MNQ gives you more freedom in terms of how many contracts you want to enter, how many contracts you want to take out, stuff like that. So for me, I personally prefer the micros, so MNQ. What about this current market with news? It has been market. Okay, I don't know what market you're trading, but yeah, no, recently the market has been very, very, very slow. But yeah, I mean the market has its own cycles, so it comes and goes. It comes and goes. Can I use the Nasdaq data on TradingView even if I'm trading futures? Yeah, I mean, if you're trading futures, you're trading Nasdaq. You know what I mean? That's pretty much what we're trading. Remember, Nasdaq is NQ, and we trade NQ. So yeah, that pretty much answers your question. Yes, I know they're the same thing, but why not trade minis instead of micros for more gain? Well, if you're trading one mini, you can trade 10 micros, and it's the same thing. The problem is if you're trading one micro and you want to sell it, you can only sell that one. I mean, that one mini. Now, if you're trading 10 micros and you want to sell half of a micro, you could just sell 5 micros, or one. If you want to sell half of a mini, you could sell 5 micros. You know what I mean? It's MNQ and NQ, they're the same exact thing. You just have to understand that one mini is the same thing as 10 micros. All right, just micros gives you more of a freedom in terms of how much you want to buy, how much you want to sell. Like if you want to buy 1/10 of a mini, you will buy one micro. All right, but yeah. What's more risk? No, it's literally the same exact thing. Once again, it's the same exact thing. You just have less freedom in terms of how much you want to buy and sell. With minis. All right. So yeah, it's kind of like a no-brainer to buy micros instead of minis, at least in my opinion. What about option trading? What about it? Let me know. Let me know what your question is behind it. Um, I mean, if I enter off a fair value gap projection, so let's say for example, we created a 40-point fair value gap. I then wait for the bounce in the fair value gap, and then it bounces 30 points. I enter and put my stop loss at the bottom of the wick. Exactly. All right. Is there any other signs to show that we might not be bullish? Okay, now I get your question. Got it. Okay, so if you're gonna be taking a continuation model, because that's exactly what you're saying right now. If you're gonna be taking a continuation model, the one thing you want to be asking yourself is, okay, or you might want to be asking yourself a few questions. All right. One of those questions should be, how bullish or bearish are we? All right. Is the buying looking really, really good, or is it a little bit questionable? If it's questionable, don't trade it. If it's looking good, obviously that is one good sign into your trade. All right. The next question is, do we have room for higher? How exactly do I know if I have room for higher in the trade? Well, find your areas of liquidity. Do we still have room for higher? Do we have a level of liquidity above? If we do, then we're probably going to go higher if the trend is bullish. But if the trend is bullish and we took out a level of liquidity above, then it's probably likely that we're going to form the MSS model very, very soon, as buyers are more than likely going to lose a lot of interest in the market, and sellers are going to gain that control and make the market now go a lot lower. All right. So yeah, that's what you want to be asking yourself. All right. Say there is some news that comes out bullish or bearish. In this example, the news came out bullish. So are we looking for shorts? So we're looking for shorts. But the thing is, price did not sweep liquidity above. Will it still be valid? I will not take a trade unless drawn liquidity has been taken out. So let's say, for example, the trend is bullish, right? And the news came out bearish, right? But we never took out the level of liquidity above. Would I still take shorts? No. Why? Because I'm missing one of my confirmations, which will be step number 2, which is going to be the drawn liquidity. If we don't have a DOL sweep, that means that the market still has room to go higher. Although right now, currently, it might be rejecting. In a few minutes, since we haven't taken out that level of liquidity above, that means that we still have room to go higher. All right, so it will just kind of lower your chances in riding with the correct trend. All right, it will just make the market a little bit more confusing. So always make sure that you have step number 2 confirmed, which will be the DOL sweep. All right, so I'm gonna put here DOL sweep. All right, so hopefully that answers your question. All right. What's a good amount of ticks and points would you TP? For my first take profit, I would say about 30 points is really, really good. 30 to 35 points because I tend to trim at a 1-to-1 risk reward ratio. So if I'm risking 30 points, I want to be taking some profits out at 30 points profit. All right. So yeah. Anyways, guys. Okay. So let's go ahead and go over to step number 3, which is going to be the market structure shift option. All right. Now, when it comes into finding reversals, all right, I'm going to show you guys a real-time example. So I'm going to delete this real quick and I'm going to move this a little bit lower. All right, just so we can get more into the first trade that we took or that we were looking at today. All right, so let's look at today's market. All right, this is the market that we had today before the market went ahead and opened. All right, so what exactly do we have here? Well, in fact, what we have here, guys, is a main low, which will be the London low right down here, which we covered in the last class, exactly how to find the Asia highs, Asia lows, London highs, London lows. All right, so what we have here is the London low right down here, and we have another pullback right over here. So to the downside, we have a few levels to take out, which will be this one and this one. All right, now to the upside, the only level that we have nearby to work with is going to be this London high. So we're going to go ahead and mark out the high just like that. All right, so if I zoom in, you guys see just like that. All right, so coming into market open, what is the first thing we want to be looking out for? Well, obviously, number 1 is going to be the trend. What is the trend right now? Bullish. All right, so why exactly do we want to continue going up? Well, the whole reason we want to continue going up is because we have one final high to go ahead and take out, which would be over here at 537.75. All right, so coming into market open, the one thing we want to be making sure that we know is, okay, what level of liquidity are we taking out first? Is it going to be the upside or is it going to be the downside? All right, when we're using the reversal model, the one thing you want to be doing is waiting for one direction to get taken out, and depending on whichever direction gets taken out, your bias is going to be against it. All right, so if we take out the upside liquidity, in this case, our bias is going to be bearish. If we take out the downside liquidity first, our bias is going to be bullish into this London high. All right, so let's see exactly what we did off market open. All right, so far what we have here is, hold on, let me go ahead and put over here. Okay, so coming into market open, let's see exactly what we have here, right? Step number 1, do we have the trend? Yes. All right, the trend is currently bullish. Now, do we have our drawn liquidity identified? Yes, we have the London high, we have an internal low, and we have a London low right below. All right, so we have the drawn liquidity identified. Now, coming into market open, what exactly do we want to be looking out for? Well, we want to be making sure that we know exactly which direction is being swept. All right, so let's go ahead and see what market open does. And as you guys can see right here, the first thing we did coming into market open was, let's see, coming into market open, the first thing we did was take out the liquidity to the upside. So in this case, ideally, we want to start looking to see if sellers gain a lot more interest in price. All right, so what we have right here is the DOL being taken out. It hasn't been swept yet because, guys, remember, when we look for a DOL sweep, we want to be making sure that after price takes out the drawn liquidity, price is able to hold below it. All right, and if it takes out the liquidity to the downside, and you need to make sure that price is able to hold above the level of liquidity. All right, so right here we have currently is a DOL being taken out, but not swept just yet. All right, so DOL taken out. All right, just like that. All right, I'm going to go ahead and put it just like this, DOL being taken out. All right, now, how exactly do we know if a DOL is being swept? Well, now that we took out the drawn liquidity right here, which will be at this London high, we need to be making sure that price is able to hold below it. All right, so if you go into the next candle, you guys will see right here that, yeah, we're selling off, all right, but we have not swept the drawn liquidity just yet. So it's signaling that the trend might flip, which will be the MSS model, but we still haven't completed step number 3. All right, wait, let me fix this real quick. We haven't completed step number 3 as price is still not holding below this London low right here. All right, and by the way, guys, at the same time, as we came into market open, you guys will see right here that we created a very, very nice. Oh, actually, wait, this candle wasn't 40 points. It was actually 36 points, but no, my bad. It was this one that I was looking out for. My bad. I was about to say. Okay, yeah. So if you guys measure out this candle, as we came into market open, you guys will see that it is a 47-point candle. All right, and you guys know anything more than 40 points is going to be a valid fair value gap. All right, so coming into market open, we created a very, very nice, almost 50-point fair value gap right around here. So this space right here is going to be our imbalance. All right. So coming into market open, after we took out the level of liquidity, we want to be making sure that we have our DOL sweep, which would be in this next candle right here. Look at this, guys. All right, so what's currently going on in this candle? Well, let's go ahead and look a little bit deeper into it. All right, so far, what we have here, let me kind of move this over just like this. Okay, so what we have here, guys, is now that we know that sellers are currently holding below the London high sweep, right, we're going to confirm our DOL sweep just like this. All right, so that's step number 3 completed. Now, if you look at the lower time frame, or actually the 5-minute time frame, what are we currently doing? Well, we're going from creating higher highs and higher lows into creating lower highs and lower lows. All right, as the market is going from creating new highs and constantly into not creating new lows in these two candles. All right, so the MSS model is being confirmed just like that. And also, if you look at like the 1-minute time frame, you guys will see that the market goes from creating higher highs and higher lows into lower highs and lower lows pretty constantly. All right, so we have step number 1 completed, step number 2 completed, step number 3 completed, and step number 4 completed as the selling pressure is stepping in really, really nice. All right, so what is the cherry on top strategy here? Right, well, what we want to be looking out for is, now that we know that everything here is confirmed to the downside, we want to be inversing the one thing holding us from going any lower, which is going to be this one bullish value gap right here. All right, so what we're going to be doing is looking to take shorts below this fair value gap once it gets inversed, and we're going to place our stop loss at about 30 points just like that, and our price targets right here and right here. All right, we're going to have two price targets to the downside, which will be the drawn liquidity right here and the London low drawn liquidity right down here. All right, and long story short, this is exactly how the trade ended up panning out, right, which we got the IFG confirmation just like this, and you would enter based off 526. All right, and long story short, look at exactly how this trade ended up playing out. Right, straight into all of our price targets. Well, it took some time today, because I'm not gonna lie, today was FOMC. We were expecting some chop, but you guys get the point. You know what I mean? Like, you guys will see right here. There it is, right? Every single price target to the downside ended up getting taken out, just like that. All right, guys. So this is exactly how I go about my reversal model on a day-to-day basis. It is extremely simple. It is 5 simple confirmations, as you guys can see right here, and that is about it. So in terms of today, what exact setup could you have taken? This one, right? First things first, coming into market open, the trend was bullish. We have our levels of liquidity identified, which would be the London high, internal low, and the London low right down here. What did we do coming into market open? The first thing we did was take out the drawn liquidity to the upside, meaning that we don't have much of a reason to go any higher, right? Because we took out every level to the upside, all right? Meaning that buyers are not going to have as much interest as they did a second ago. And if they don't have interest, what tends to happen? Sellers step in and start gaining more control. Hence the DOL being taken out and the DOL sweep forming right here. Now, as we set the drawn liquidity, we got a ton of selling pressure kicking in, which will signal the seller aggression and the MSS model being formed just like that. Now, we're going to go ahead and inverse the one thing holding us from going any lower, which is going to be this 47-point bullish fair value gap right here. Once we inverse it, we take our entry and we target the lows that we created, which will be the drawn liquidity to the downside, which will be this one and this one right down here. And just like that, you have yourself a beautiful 120-point trade just like that, guys. All right, so today, although it was really, really choppy, it was actually pretty clean. I'm not gonna lie, although I didn't trade it, I did like today for sure. And if you guys did make money, which I know a lot of you guys in the premium made money, really, really big props to you guys. You guys read the market perfectly, and I'm extremely proud of you guys, all right, for using the model correctly. All right, now let me know in the chat if you guys do have some questions. I'm gonna catch up with some of the questions that you guys were typing as I was explaining the model. All right. And by the way, guys, a little quick plug here, since there are a lot of you guys in here, about 80 of you guys watching the stream. Guys, if you guys are interested in joining the premium to getting access to these trades and more classes like this, guys, you guys could use code Blastoise with the first link in the description, and it'll give you access to 70% off any premium upgrade. All right, that's if you guys like my work. If you guys obviously want to catch these trades live with me and all that stuff, once again, guys, it is called Blastoise. It is at the top of the screen to get access to the premium. All right, guys, it's a way to support me. It's a way to obviously get some extra work with me and all that stuff. All right, guys, what does bullish mean? Bullish means that the market is going up, and bearish means that the market is going down. All right, but in the meantime, guys, other than that promotion, by the way, guys, for the people asking about Apex, once again, Apex, the 90% off code is ending tonight. It is called Blastoise off for 90% off any funded account. All right. Thank you. I got you, bro. I got you. All right. But anyways, guys, let me catch up with some questions here. All right. Someone here said, I joined the premium a few days ago. I'm looking to pass my test on Apex. Bro, you know I got you, bro. You know you're in good hands, bro. You're in good hands. But yeah, let me see here. Does this work with any market? Yes, it does. It can work with any market because any market, the markets pretty much move based off liquidity. All right, liquidity being pushed in, liquidity being pushed out. That's why the market goes up and down. All right, so if you're able to get an understanding as to how liquidity works and how you're able to read reversals, yes, it can work with Tesla, it can work with Nvidia, Nasdaq, S&P 500, gold, Dow Jones, anything. It works. So yeah. Anyways, we take trades based on the first level that gets taken out. At what point do you switch your bias when price is ripping in each direction? 2 days ago, a lower low was taken out, but we still wanted shorts. Why? Okay, good question. Well, there's going to be times where, yes, we take out a level of liquidity, right? But we might have another level of liquidity nearby, right? So the way we work around this is if we take out a level of liquidity, we're not going to instantly be taking longs, all right? We want to be seeing the reaction based off that level of liquidity. Now, if we still see that sellers are still interested, then our bias is not going to be bullish. It's still going to remain bearish until we take out the next level of liquidity. Why exactly? Well, because sellers are very, very interested. They're still in control, right? But there will be times where price takes out the upside liquidity and we get an instant shift to the downside. All right, so you can go both ways. But that's why I told you guys earlier. Yes, technically you could take longs after you take out a level of liquidity, but it won't always play out in your favor because sometimes the market could go higher or lower in that direction because it might want to take out some levels of liquidity lower. All right, let's use today for an example, right? We took out this level of liquidity. We got a little bit of interest in buying as yes, we did take out a level of liquidity, but sellers were still in somewhat of the control, which means that we're probably going to go lower, as you can see right here, into the next level of liquidity. All right, now that we took out every single level of liquidity to the downside, look what ended up happening. The market ended up pushing back up to the upside. All right, look at this. Right? So it can go both ways. So that's why I always tell you guys when you're reading your levels of liquidity, always wait for the valid reaction. Once you get that reaction that you're liking, whether it's a continuation model or a reversal model, then you strike. All right. So yeah, hopefully that answers your question. But yeah, let's see what we have here. No, let me see. Yeah, that's what I was. That's what I took this morning. He's showing it in the current trade, but he took out. No, today I didn't take any trades, but I'm just showing you guys what I like today. Today's market was actually, although it was slow, it was a really, really good market. We gotta agree with that. All right. The upper level was the London high. Yes. All right. So when you guys see the orange line or, above or below, that is known as the London high or low. The blue lines are the Asia high or the Asia low. All right. Let me see. Someone here in the said, I'm in this premium. It's definitely worth it. Put in the work and receive a reward back. 100%, guys. You guys know I'm all about my work. I'm always trying to deliver my work so I can get results for you guys. All right, guys. But yeah, much love, bro. Thanks for the vouch. Premium member here. For those not in the premium yet, I highly recommend joining. This member here has gotten me has passed my evals and payouts worth every penny. Much love, bro. Much love. All right, but guys, thank you for hyping me up in the chat. Thank you for hyping me up in the chat. Why is the fair value gap you chose not 3 bullish candles in a row? I thought that's what they were. No, good question. A lot of people actually get confused with that, but no. When you're looking for a fair value gap, it does not have to be green, 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 or red, red, red. It could be red, green, red, or green, green, red. It doesn't matter. As long as you're able to identify where the imbalance is in the market, which in this case will be right here, right? The 50-point candle, just like this, then this will be your fair value gap right here. But no, it does not have to be green, 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 or red, red, red. It could be green, red, green, red, red, green, 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 red. It doesn't matter. All right. But yeah, as long as you're able to identify where the imbalance is, it will work out in your favor. All right. All right. But in your strategy video, didn't you say to wait for the lowest or highest point to get inversed? Yes. Right. But in this case, yeah, the only fair value gap that we had to inverse was this one. Now you might be thinking, hey, don't we have a fair value gap right here? No, because if you measure it out, it is only 36 points. I remember when we're looking for an imbalance, we're looking for 40 points or more in the candle. All right, this right here is not 40 points. All right, so the only fair value gap that we had to inverse was this one. All right, so we inversed this and we had nothing stopping us until this level of liquidity below. All right. All right, let me see here. I'm scared to enter an IFEG after it breaks out. What if it retraces immediately? Well, bro, you can't be scared. You know what I mean? Obviously, it won't always play out in your favor. Because remember, trading is never 100%. Banks lose, hedge funds lose, we all lose. It happens. You know what I mean? No one is perfect in the market. All right. Now, if I never lost, trust me, guys, I would not be selling a $50 premium. All right. I wouldn't even be doing this on YouTube. You know what I mean? I'll be working for a bank. All right. So yeah, nothing in the market is 100%. So you can't hesitate. You can't be scared of these fair value gaps. You know what I mean? Because the more you hesitate, the later of the entry you're gonna get. And if you hesitate and don't enter, you're missing out on certain profits. All right. So that's why I'm telling you guys this 5-step model. Right. Remember, this model is just to raise your probability in a working trade. All right. Remember, it's not gonna be 100%. No one in the world has a 100% win rate. If they do, run far. All right, run far because they're a million trillion% lying. All right, that's not how it works. All right, banks will pay literal trillions for even just barely a working strategy. All right, and no one's gonna sell you a 100% strategy for $20. All right, guys. So yeah, keep that in mind. Keep that in mind. All right, let me see here. Another premium member here, the best at keeping it simple and getting effective results. Thank you, bro. Thank you. Much love, my man. Much love. Are you still trading? Are you still using options, or have you fully moved to futures? I have fully retired from options. I don't like options anymore. I prefer futures all the way. All right. But yeah. Let me see. I was looking for a bigger fair value gap. Oh, okay, got it. I think I was talking about the fair value gap more to the left. We don't have any here. Because down here, if you're talking about this one, I mean, if you took this inverse right here, you're gonna hit the price target before you retrace into this one. But yeah, let me see. How would you have taken the entry on the 1 minute retrace? I don't use the 1 minute. Keep that in mind. The bare minimum time frame that I use is the 5 minute time frame. That is the main time frame I always use. All right. How do we identify the take of the level versus a sweep? Well, the take is simply just price hitting the level. You know what I mean? It just taking it and hitting it, same thing. All right. Now, a sweep is after we took out the level of liquidity and we're currently holding below it. All right. So yeah, just that's pretty much just what it is. All right. But yeah. So yeah, once again, taking it or hitting it is just simply just the price hitting the level. It's not doing anything, you know what I mean? It's just hit it, you know what I mean? And sweeping it is after the price hits it, you get a reaction off of it. All right. Purchasing the CME data subscription will give you real time. No, that's it. All it gives you is real time data. That's all you're buying. Just join the premium, ready to pass my Eva, bro. You know I got you, bro. I got you, bro. I'll see you in the live tomorrow. All right. It's $40 including plus per month. Wait, what? What's $40? The CME data? Or I don't know. How do you hold trades? My emotions start to kick in when I'm up 20 points. I mean, bro, that just means it's more you're just stuck on more of a mental level. It comes with screen time, it comes with more experience and everything. Me personally, I used to sell very, very early as well. I used to like my little profits. But bro, as you get more experience with the market and as you start to trust your strategy a lot more, you're able to trust the strategy enough to hold the trade for a lot longer. All right, and also try not to be so attached to your account. I mean, remember, once you guys are starting to chase money, that's when the market has complete control over you. All right, try not to get to that level. All right, try to get to a level where you don't care about the profits, you don't care how much you win or lose, you only care about what the chart is doing. Once you guys chase the charts and chase the correct trades, the money will follow. All right, same thing goes that, you know what I mean, if you chase money, girls will follow. You get what I'm saying? Same thing, same concept applies with the market. All right, chase the charts, the money will follow. All right, but yeah, um let me see. Once you buy, wait. Oh yeah, okay. Once you buy an Apex account, you get live on TradingView for free. Yeah. With Apex, they do offer free live data, but there might be some people in here that might trade with a real account, or you know what I mean, stuff like that. So yeah. When you hit the low at the end of the day and it skyrockets back up, can you show the confirmation of where you could have taken a possible trade from the end of the day bullish trend? I got you, bro. All right, now, I'm not gonna lie to you. Okay, let me kind of see here, because if we're looking at this bounce right here, although we did get a deal sweep, obviously we took out the London low and we swept from it. We got a massive push up here. There's not much of an entry you could have had here, because not only did we chop out literally all day today, but there was no gaps here that you could have really taken off of an imbalance. All right, so the market just kind of bounced without an entry. So there's not much you could really do here, in my opinion. Although it did look really clean hindsight, there's no entries. All right. But yeah, let's do this. You know I got you, bro. Liquidity sweep equals price reversal. Liquidity grab equals trend continuation. I mean, uh, I guess you could word it like that. Yeah. Why is the fair value gap called an FEG? What's the difference between an IFEG and an FEG? How are the entries determined between them? Good question. All right. Now, that will literally take hours to explain. So what I'm gonna do is just go over to my YouTube, right? Go to videos and watch this one and this one. This one is me explaining how IFEG works, and this one explains how regular FEG works. All right. So yeah, just watch these two videos and it will literally explain everything. All right, bro. But yeah, let me catch up with the chat real quick, guys. Give me 1 sec over here. Okay, let me see. Um, Yo, Blast, do you pay the Apex monthly fee after you pass an eval? No. Well, it depends. If you pay for the monthly fee, then yes. But if you pay for the lifetime fee, no. You pay a one-time fee, the account gets activated, and you never pay again for that account. All right. So you never move your stop loss after you enter a trade. No, I micromanage it. So if I'm in profit, I will like trim it to like break even and stuff like that. All right. I used to trade with you like 2 to 3 years ago. Did you ever end up getting the Porsche you always wanted? Bro, yeah, bro. I sold the white BMW. No, I didn't get the Porsche. I instead got a C8, bro. I got a blue C8, bro. One of my dream cars. Beautiful car, bro. Check it out, bro. And by the way, bro, it's been a while, bro. 2 to 3 years, bro. So you're an OG. But yeah, bro, I ended up getting a C8, which was like this. Let me see if it loads. Here it is, bro. Beautiful C8. So yeah, no, I didn't get the Porsche, but I got a C8, bro. Yeah, beautiful car, bro. Amazing car. But yeah. Anyways, let's see here. Is it necessary to buy the CME bundle? I would say so. Yeah, I would say yeah. Yeah, the CME bundle should work. Yeah. On your broker, let me see. When passing my eval, how do I know which setup you're looking at is A plus? Well, if you have every single one of these confirmations, then it's perfect. If you're missing one, try to avoid it because the setup is not A plus perfect. All right. So when you're looking at a setup, make sure you have this list right here and make sure everything here is checked out. All right. If it's not, then it's not worth taking. All right. Is a liquidity grab would that be an internal liquidity? No, it could be any liquidity. It could be a London high, London low, Asia high, Asia low, external high, external low, internal high, internal low. It does not matter. All right. In general, it is just a regular level of liquidity. Congrats. Thank you, my man. Thank you. But yeah, from what it seems like, guys, I'm pretty much caught up on pretty much all the questions. I don't want to hold you guys for too long here. So guys, I do have to record some videos. I have some mentorship calls to catch up on. So guys, I'm going to go ahead and end the stream for today. Hopefully you guys were able to learn something with my strategy, with the reversal strategy. And guys, I will be live trading tomorrow in both the premium and in the YouTube. So I'll be seeing you guys tomorrow. Now, before you guys get off, guys, once again, if you guys want to get 70% off any premium upgrade, it is called Blastoise with the first thing in the description. And make sure you take advantage of the 90% off Apex discount with code Blastoise. It is ending tonight. All right, guys. But yeah, I will be seeing you guys tomorrow. Hey, my man, is this for futures? Yes, it is for futures. Or it works with anything, but I mainly do futures. All right. But yeah, guys, I'll be seeing you guys tomorrow. Hopefully you guys join the premium. I really want to be seeing you guys in there so we get, we make some money together. All right, guys. But yeah, I'll be seeing you guys tomorrow then. All right, guys, in the stream. All right. Peace out, guys. Enjoy your night, and I'll be seeing you guys tomorrow. Peace out, guys. Peace.